Hi, welcome to Market in a Minute. So I'm out in Orange County at the Roth, uh, I was going to say concert. I don't know if you can hear it on this video, but the Goo Goo Dolls are out in the background practicing for their big show tonight. So, yes, we're at the Roth conference and a lot of good companies here. I got to say, we own APA, Apache. That's a great story. The story behind Apache is they're going to see nice cash flow growth, about 25% for the next 5 years or so, with a big acceleration in 2028 as a big project comes online that they didn't have to fund very much. And then their share count is shrinking, and so they're going to see expanding cash flow on a lower share count. That's an exciting story. The stock yields about 5%. I really like this one, so this is something that we'll be adding to. I originally bought it just as a play on higher oil prices, but Apache APA, I like that one a lot. That's going to work out. That it just has the right math around it all the way around. So we think we had a technical buying opportunity last week, and we took advantage of it. So it's one of those things where you have to anticipate rather than wait till the moving averages get crossed at a certain level. So we stepped in last week, got a nice pop on Friday, a little bit on Monday, and we'll see how far this carries. It's important to have stop losses in place when you do this, as you're in a counter trend rally. So that means the trend is down, but you're going to get a potentially a nice oversold bounce in the overall markets. So, like the basketball, we're in the March Madness in the markets as well. We're looking for layups. Like Apache, I like that one a lot. I mentioned last week Intel. We bought that one very nicely and had a nice pop to it. Gap stores, we talked about that a little bit last week. I think that one's still down. I like Gap, but Gap is turning nicely. Those are some examples of what we're doing. So the strategy update. So the market hit down 10%, right? Had a 10% decline. And then with the government, continuing resolution being approved, the government funding in place, the market popped 2%. And I don't know if it was off that news or just a big oversold condition and things got too negative. But a nice pop on Friday. And we think it could carry at least to about a 5%, bounce off that low. Maybe it's a little bit more. Maybe it even goes back to the old highs. There's some important things that are happening, like the reciprocal tariffs on April 2nd, so we'll have to watch that. And then on Wednesday, so this is important this time. Usually the Federal Reserve meetings aren't too important lately, but we think Wednesday's Federal Reserve meeting and press conference might be very important in that they'll spell out kind of what they think about what's happening this year and then next year. We think maybe there's going to be more cuts than what the market's currently anticipating as the economy slows down. So what we did last week, so we bought some XYLD, QQQ, IWM, and some individual stocks. I know you're probably wondering what the heck is XLYD, right? It's one of those covered calls writing S&P funds. We like this one because it has a 12% yield. It seems to track nicely with the S&P on the upside. So it got this oversold condition here, and we stepped in and bought that with the QQQ because the tech stocks are all way oversold. Not that we think tech's going to run a great deal, but we think that they're oversold, and there were some good names to play there. Also, the Russell 2000. That's what we want to play when we finally get to this big oversold condition at some point this year. And looking out to 2026, we think those small companies are going to do really well. So what prompted the purchase was basically this oversold condition in the overall markets. When we got some of the news, some of the negative news built into the overall markets. And I'll cover that on the next slide, but we got some of that really negative stuff starting to be realized by the overall markets. You never can tell how much is actually discounted. Um, so what we're wondering was that a real buying opportunity in overall markets, or was it just an oversold condition and we popped? We're leaning to it just being an oversold condition and it popping. But if the Federal Reserve has a good meeting, the tariffs don't turn out so bad, earnings momentum holds up through this year and the next year, maybe that was the bottom, but we're not thinking it is at this point. So it's, as I mentioned, it's really important if you're going to do these sort of counter trend rallies is to use a stop loss just in case the thing starts to roll back down on you. So we are looking for layups in the overall market, like I mentioned. So good quality companies that are beat up, and there's quite a few of them out there at this point. And then the Fed meeting, just keep that in mind on Wednesday. So make sure you watch out for that and understand what they're saying. Now, the major issues in the markets that maybe have been discounted to some degree and maybe not. So the economy's slowing. Now, as you know, we've been on this. So back in about the second or third week of January, can't believe it's March already, but the second or third week in January, we pointed out some of these earnings reports were coming in, lower than what we had expected, a little weak on the economy side, i.e., Walmart in there as well. So we thought, okay, the economy is clearly slowing at this point. And we think it's from mostly the cumulative effect of inflation hitting the consumer, but also maybe some of the tariff talk is starting to make people act a little differently, put them in slow motion a little bit just at this point. So in terms of the government spending, and there's been not a whole lot written about this, but we've been talking about it for a long time. And finally, there were some stats coming out how much Biden spent in the last 3 months of his presidency, and it turned out to be about $300 billion, right? That's 1% growth in that quarter, not annualized, but just for that quarter. So if you analyze that out, that's roughly 4% growth to the overall economy. So he did this for like the last 6 months or more of his presidency. So the economy has been propped up by a lot of government spending. We finally think that the economy, the markets are wising up to that. Now, with the government cuts, what's that going to do? Well, if we truly have $1 trillion in cuts, that's going to hit the economy by about 3%. So it's probably over a 12-month period you'll see those sort of cuts implemented. And again, that's deflationary. That'll slow the economy down. That'll free up some resources that were being taken over by the government. So long term that's good. Short term may be bad. And we think that's finally starting to get discounted in a little bit by the overall markets. So we want to understand what the market's discounting and what it's not. So that could cause a recession. So we think another 10 or maybe even 20% down in the overall markets discounts a recession. This will probably be more of a technical recession than a full-fledged a lot of people out of work, not being able to find jobs and having their houses repoed and things like that. So as inflation potentially heats up because of tariffs, we don't see that. We don't, because the money growth isn't really growing much to support higher prices. So with the low money growth, we don't think that the tariffs are inflationary. They're more along the lines of probably hurting the economy, if anything. So we think we would check that as a potential positive. But initially, the market's going to freak out about every single tariff increase there is. And as I mentioned, April 2nd is when we get the reciprocal tariffs hit. Iran, I don't know where the market is in thinking about Iran. I think maybe a little bit as oil prices kind of went up a little bit here recently. So they're taking out the Houthis. So the Houthis can't do a counterattack on the Israelis when the Israelis are taking out Iran's nuclear sites. And basically, Iran's told us to go screw off. They don't want to have any negotiations around their nukes. And so I think it's inevitable that these nuclear sites are taken out, and we do see higher higher oil prices because of it. And then the AI infrastructure spending, I think it's a little bit in the market. You know, a little bit of expectations that that's flat to down next year. I don't think totally, but clearly the expectations is that it's slowing down. So we think we got some of these issues. These issues are going to take a while to ultimately all play out. We did have a counter trend, opportunity to buy here. We think it lasts a little bit longer, and it's always smart to start buying really good quality companies that are doing well when the markets are down. So again, at the Roth concert conference, and again, I don't know if you could hear that the Goo Goo Dolls warming up in the background, but lots of interesting companies here. We're getting some good ideas, and we'll give you an update next week on what we found. Take care.